Good morning, team. Happy Thursday. It's time for a mortgage rate update. Some good news out there. So I wanted to share what's going on, talk about what's happening with buyers in particular, of course, in this crazy seller's market that we're in. How are you getting offers accepted? What are the things that are working? A lot more offers accepted in the last business week, I would say, than I've seen in previous business weeks. Let's put it that way. So some things happening, some things we're probably learning, some things that we can probably still get better at, but wanted to share these things with you this morning before things get too crazy, as I'm expecting today to be a little bit wild. This is one of those everything is up days. So, everything's up. There's nothing wrong with that, right? You look at your 401k, it's doing well. You look at your stock investments doing well. Mortgage rates going down. Hey, let's look at mortgage rates first. And then let's talk about winning in this market. I'm going to answer a question too. I'm going to start doing a question of the day every time I make a video. So you get so many good questions throughout the day. And we hit that right now, hitting the ceiling of resistance here. Man, if we could break through that, it would be an amazing opportunity for rates to really go lower. Now, if you remember when we were back here, this is mortgage bonds, by the way. So mortgage bonds, we had our peak up here back in the very beginning of the year in January. That was when rates were the lowest for 2021. And we sort of double topped over here and then went straight down from there. Now, when mortgage bonds, which is what this is, go down, mortgage interest rates go up. So we want this to go higher. We want these bonds to trade for higher value so that the rates are lower. That's the ideal situation. And when we were down here, as you'll recall, and we were trying to figure out if we were going to have any upside, my prediction was that we would get to 103.50, and look where we are right now. 103.53. Now, I thought that was probably all that we had in us. It looks like maybe there's some steam behind this thing. I don't know if it's just the Fed in there buying, which is crazy to me based on the inflation situation that people would be running to bonds. But look at how good this chart looks here for mortgage rates as we're starting to see, VA rates creep back down into the mid twos, from the high twos to the mid twos. I think the low twos are probably going to come back, as I predicted about a month ago when this was still looking really ugly. And so I think we'll get back there, and this would really clear the path if we could break through this ceiling right here that we're touching. We're literally right on top of it right now. It's at 105.53, and that's exactly where we are. So let's see how the day transpires. It's still early. It's just past noon Eastern, 9:15 here in California. So we have some good things here. Look, higher lows. Okay. This is a really good sign. This is extremely bullish, actually. These lows all coming in at higher points. And this day was the big day. Okay. That was Tuesday. So on Tuesday, it looked really ugly for a while. And then all of a sudden, boom, goosed up. And I don't think the inflation numbers really warranted that, but that's where we're at. So rates are great. Rates are great, and today will be a very important day. I have a feeling we'll close somewhere below this number, but if we close above that, if we close up here somewhere, off to the races, maybe up to 104.30. Meaning another 80 basis points of upside for rates. That may take us to the low twos for the best credit scores if we see that. So if you're a buyer today, this is actually, we're finally starting to see some recovery from this huge multi-week crushing of mortgage rates, which sent rates up anywhere between 0.5% to 1+% for lower credit score borrowers, to now we're starting to see some of those really good rates come back. So this is a great time to get locked in. For people who are just getting into contract, I have several people who've gotten in contract just this week who, we were quoting 3% or whatever, 3.25%, and now they're getting into the twos or getting rates much lower than what we've been quoting. And what an awesome thing that is. When you're, budgeting and trying to figure it out, you finally get in contract, you feel like you're paying so much for this house because it's a strong seller's market, but then you get a 0.25% lower rate and save some money. That's such a cool thing. So I love it when that happens. It's one of my favorite things in the world. Love saving people money. Love being able to take advantage of the market when it's working in our favor. Okay, so let's talk about the question of the day for a second here. And I'm going to start doing this for every video. So this is a really good one. And this came up, and the applicability of this is super, super important. Should I pay off my debt as much as possible? If you don't know what AMAP means, I didn't either, prior to buying a home. So no, this is a very, very important answer. Unequivocally, I will say, no, don't do that. If you have money to pay off your debts, get pre-approved first, because that money could be put to better use potentially. And there may be more efficient ways to pay off your debts to help your approval that you may not be aware of. You may say, well, I want to pay that one off because it has the highest interest rate, but it may have the lowest payment. So we'd rather pay off a different one with a higher payment to help get your ratios in better line for purchasing. It also could be the case that that cash would be better used as an appraisal bridge. And even if you don't use it for an appraisal bridge, which is where an appraisal bridge is when you offer to pay to cover a difference if the home appraises lower. So let's say you offer $600,000, it appraises for $580,000. You put in an appraisal bridge for $10,000, meaning you're willing to pay $590,000. You're willing to pay $10,000 above that appraised value to get towards your purchase price. And that is what is helping offers get accepted right now. That is really the key. If you want to get your offer accepted in this market, you got to have an appraisal bridge for the most part. I do have 2 offers in the last 7 business days that did not have an appraisal bridge that did get accepted. Both were VA. And, I think we have some sympathetic sellers and a few other things working in our favor, some hustle work by the agents and myself. But for the most part, having that cash on hand is king. So instead of paying off debts, which sounds like the right thing to do, sounds like the responsible thing to do, sounds like something that's going to help boost your credit score, it's going to save you money with a lower interest rate. That may or may not be true. But what is true for sure is that cash is helpful to have when you're actually in the process of writing offers, because we need to be able to show that you have the cash. If you're offering an appraisal bridge, you can't just offer it willy-nilly. We have to be able to show proof of funds that you have the cash. So much better than paying down debt and saying, hey, look, we don't have any debts. The seller doesn't care. So that's an unequivocal answer on that one. Kathy, I see your question. How much should you offer an appraisal bridge? Let me know if that's the question that you're asking, because my suggestion with the appraisal bridge is offer however much you're comfortable with. Some people are offering everything they have. I've seen people bridge appraisals and get gift from parents to cover it. That's how competitive this market is. Would I recommend that? Not necessarily, but I think if you put 10 or 15,000, if you can do that, that's really, really, really helpful. I've seen some people recently offer 25,000. And every time someone has offered 25,000 or more in appraisal bridge or remove the appraisal contingency together, then that is getting their offer accepted. Now, the other thing too to keep in mind, if you are putting down a big down payment, so there's some people who are buying and they're planning on putting down a big down payment. If that's the case, especially if you're VA where you don't really need the down payment, make sure that you're waiving the appraisal contingency or doing something with the appraisal contingency. I've seen some offers go out or people make offers where they could have waived the appraisal contingency because the appraisal was inconsequential to the deal. Either they're putting so much money down or it was a VA loan with a down payment. They didn't need to have the home appraised in order for the exact same circumstances to be the same for the buyer. So if you are putting a lot of money down, then just make sure that you're correctly keeping the contingencies that you need, because the sellers really like that. Sellers love it if you can waive the appraisal contingency. Sellers love it if you can do an appraisal bridge. But if you waive the appraisal altogether and just say, we don't care where it comes in, we're buying this place, that's pretty much going to get you the home. That's pretty much it. Say, hey, listen, our purchase price, our offer price is our price, regardless of the appraisal. If you can do that because of how much you're already putting down or the fact that you have the cash on hand to do so, that 100% will get your offer accepted. So that's just the kind of market that we are in. Okay, as he said, would you recommend borrowing from 401k to cover that appraisal bridge? Hey, this is a good question too. Thanks for the questions, Kathy. We are live here. And so if you have questions, you have comments, you want to say something, please jump in. So Kathy, good question. So you can do this for the appraisal bridge. If you're going to look at your TSP or your retirement account or 401k as offering potential appraisal bridge, 2 things. Number 1, make sure you contact the provider that you have your money with there and ask them how long it takes to get money out. If they tell you 7 days, be prepared for that. Make sure that your lender is prepared for that so that you know the timeline. You can stay in accordance with things in case you need to use it. Now, remember with the appraisal bridge, it's only in case. It's insurance. So you may not need it. If the home appraises, then it's fine. You keep it in place. So whatever you do, if you are going to offer your 401k, your retirement account as an appraisal bridge, don't pull the money out until you know you need it. Now that may cause a delay in the timing, right? That's why you need to call and see how long is it going to take to get that money from your TSP or from your 401k so that we know when we have to ask for it. And as soon as the appraisal comes in, as soon as you know if you need it or not, send that request off immediately, because that's going to be, a key to keeping in the timeline for those types of situations. You can absolutely do it. And if you use your 401k in particular, Kathy, talk to your CPA, but I believe there is additional benefits to do that and not have to pay some early withdrawal taxes. There could be, depending upon the situation. So great question. What's up, Justin? How you doing, my man? Appreciate you stopping by and saying hi. Thanks, Monty. I love it. Did you know the Lee Home team sells homes for 100%? That's terrific. And you know what? I did know that because Jay tells me on a regular basis, and I watch the Lee Home team operate on a regular basis. So yeah, I'm definitely aware of that. So today, one of those kind of everything is up days. When we see these days and, bonds are trading higher, and look at that. Look at this. As we've been on this call, we have broken through the ceiling of resistance. That doesn't mean we're in the clear yet. If we can close up there later today, bonds could be off to the races up here to the 104.3 mark, another 70 or 80 basis points, which would be tremendous for mortgage rates. So we're going to be floating today. We've got a couple new ones in. We're going to see what happens. One of the advantages that we have at Align Mortgage of California is we can lock the rate after the market closes at the same pricing. So I have about 3 hours after the bond market closes that I can lock the rate at today's prices before we see the effect of today's action on tomorrow's rates. And it's kind of a huge advantage, because if it tanks today, then I'm going to go ahead and lock, because I know that price, that's going to hit the pricing tomorrow. And if it takes off like it's doing right here, I can just let it roll, see where we close. If we close in a really bullish position, then we'll wait until tomorrow. So that's a pretty big advantage. Everything's up. Dow Jones, I think that's a new all-time high. Market hits all-time high after blowout economic data and strong bank earnings. If the banks can't make money with free money, then I don't know what to tell you. So yeah, the banks should be doing really, really well. So they're getting money for free from the Fed. Dow, 34,000. Can't believe it. Just nuts. S&P 4,100. NASDAQ's 14,000 again. And I believe the Russell is close to, if not also hitting an all-time high. So there you go. Coinbase IPO was yesterday. I picked some up. I don't know if you guys are paying attention to that or not, but I'll mention it just really quickly, because a lot of people were asking about it. A lot of people asked me about Bitcoin. A lot of people asked me about crypto stuff, just because I'm into that and I'm paying attention to it. But Coinbase, I picked it up. I put in a sort of a sniper buy order at 350 when it was trading much higher, and got filled. And now looks like we're sort of establishing the 330s here. A lot of people think this is going to be a $400 or $500 stock. We'll see. I didn't put too much into it. I bought 20 shares. No big deal. But just wanted to have some exposure to that, because I believe the growth potential there is insane. Maybe a 0.1% adoption worldwide so far for crypto. So, I mean, you look at that, you look at the potential upside. I mean, it's 100x, 1000x. There's really something there. So that's basically today's update, what it's taking to win in this market, what is happening in mortgage rates, and where I think we should be focusing our attention right now for people who are buying, who are looking to get into a home and want to win in this market. Hey, what's up, Christy? What's up, Wesley? Appreciate you, my friend. Some really, really good agents out there, team. And I've just showed you several of them here. Really, really, really good agents out there. And it's not easy to pick an agent when you're looking for one. And I'll do a whole nother video in this market, particularly to talk about that, because it is a big difference maker. But main things are, how do we win? What's happening with rates? These are the main things people are asking about. And then, of course, paying off the debts. I wanted to throw that in there today, because I've seen a lot of people believe they need to pay off their debts before they get to this point, and it actually sets them back quite a ways. And so that's really sad when someone is working hard, feel like they're doing the right thing, they're paying off their debt, and then it actually sets them back in their home purchase dreams. And our whole process, our whole reason for being is to try to help people not just achieve the dream of home ownership, but to achieve the purchasing of their dream home or a tremendous investment. Quick example on that, by the way, with the Airbnb investment opportunity. You want to know one of the reasons why all price points are going nuts? A buddy of mine bought a couple $1 million house in Encinitas as an investment, and he's Airbnb-ing it for $10,000 a week, and his book's solid. Now think about that. A $2 million house, let's say his mortgage payment is really, I don't know what it is. He didn't get the loan with me, okay? But sometimes your friends don't want to show you their finances. I don't take any offense to that at all. But he, bought this $2 million house, Airbnb-ing it for $10,000 a week. $10,000 a week. $40,000 a month. So even if his mortgage payment's $10,000, he's absolutely making a killing on this property. Now, if that's going on, if we really have that kind of inventory scenario, and we do, and there's actually a story I was going to pull up on this broadcast, which I did, and it's buried now, but inventory is the problem. We're 4 million homes short in this country right now versus demand. 4 million homes short, which if we have about 400 million people, which I don't even think we have that many, you're talking about 1% of the population. We don't have housing for 1% of the population, which doesn't sound like a lot. But when you really think about the home buying population, that's a much larger chunk. So there's a inventory shortage nationwide that is causing this. It's not just in great places to live like San Diego, or what I would say is the best place to live in the world in San Diego, but it does make San Diego a lot harder target. Okay, let's put it that way. Remember, the San Diego market, for people who are concerned about, how long can it last and when will there be a dip? Remember, the San Diego real estate market is a leader on the upside. So when the market is bad and it starts to improve, the San Diego market will improve before other markets will. Also, on the other side, when the market turns sour, okay, houses in Iowa will start to feel that pain before we do here in San Diego. So the fact that the market is hot everywhere, that actually provides a big layer of insulation for the San Diego market. We need to keep that in mind. A lot of people think, there's a crash coming, or I'm going to wait till prices go down. It's not happening. Not anytime soon. I think it could be 3 or 4 years before you see a quarter in which, a 3-month period in which the San Diego market recedes. It could be 3 or 4 years. I mean, there is so much demand. There is so much momentum behind this, and it's widespread. It's not just San Diego. It's not that people are just discovering San Diego. It's everywhere. We just so happen to be the best city in the greatest country. And so, there's no better place to invest your money, in my opinion. Yes. Thank you, Kathy, for that. I do think it's important to understand that. If you know anyone who has questions about the VA home loan benefit, whether they're looking to buy or refi, have them give me a call. Derrick Evans here, NMLS 155010. I hope this is helpful for you. Have a tremendous day. I'm going to go get after it. You go get after it too. Let's win. Let's crush together. Have a great day.